Welcome back to the Dividend Diplomats YouTube channel, guys. We are here. The dust is definitely not settled yet. The smoke is still hazy right now. But, we're talking about the aftermath after First Republic was acquired, obviously, through the push of the FDIC by JP Morgan, good old Jamie Dimon. And it has sent the banking industry tumbling here. Ain't that right, Bert?
That's absolutely right. Before we jump into it, though, make sure you subscribe to the channel. Give this video a thumbs up. I'm smiling because you know how you said the dust isn't settled, Lanny? You know what I'm picturing in my mind here? I'm
What's that?
picturing like they're in the middle of one of those wrestling matches, and all of a sudden the lights go out and you just hear the Undertaker's bells,
Yep.
and you start seeing the smoke rising, and you don't know what's about to happen. You have no idea where Taker is, if Taker's even going to come. But that's kind of what we are right now, because that's kind of what the banking sector feels like. You had that shock of First Republic. Then everything was stable for a day. Everything was stable for a day. And then today we're filming on May 2nd. Whoa, the Fed started a meeting. And my God, did banks just come tumbling down?
Yeah, I mean, it's you could argue, again, terrible Monday, terrible Tuesday, sell in May, go away, come back another day. It's in full force right now if you're a bank investor. And the overall market also isn't doing too hot anyways this week. But as Bert said, we're filming this here on May 2nd at about 10 o'clock here at night. Video is going to be released obviously here on May 4th. So we're, slightly delayed by a full business day. But the Fed will be wrapping up or have wrapped up already on May 3rd for that extra 25 basis points that we more than likely did just receive. But the banking industry right now, stock prices are tumbling. We're not talking about the small ones. We're talking about the super regionals, the close to 200 billion all the way up to 700 billion in total assets. And again, even the biggest ones are also falling. You name it, Wells Fargo, Bert, Bank of America, they're all tumbling right now.
PNC, Citibank, they're all coming down. And the important thing is to start looking back and thinking, is this an opportunity or is this a sector I'm just trying to avoid altogether right now? And Lanny and I are obviously always very in tune to bank. If you've subscribed to our channels, we watch this sector closely. It's our favorite sector. It's kind of what we grew up with in our careers. It's something we know well. And there are some signs within some of this noise that make you feel a little bit better about the banks if you start peeling back some of their financial statements, their earnings release, you look at the earnings transcripts, even the call reports if you feel like it. There are some things that say that it might not be as bad as some of the stock prices that are falling is what's going on, and there may be opportunities to buy some of these larger banks that we're going to discuss today.
Yeah. So, guys, we're going to feature again three of the super regionals. No, again, we're not talking about Citigroup, Bank of America, or Wells Fargo. We've already talked about them in the past, but now we're going to head down to a little bit of a step down. We're going to be talking about Huntington Bank shares, H Bank, Key Corp, Key ticker symbol, and US Bank ticker symbol USB. The smallest one is Huntington at 189 billion. Key banks right there at 197 billion. And then you do have a large as heck one, but not quite as large as the other bigs in the country or in the world. But US Bank at 682 billion.
It's large, all top 20 banks, and it just shows to how big the tiers are and how fast the size of these banks fall down in between. Two of them are headquartered in Ohio. Huntington's headquartered in Columbus. Key's obviously in the greatest city in all of the United States, Cleveland, Ohio. Let them know. And US Bank, aren't they? I can't remember where they are. They're not Ohio, so I don't care. I'm kidding, everybody. Is it? Where is? Anyway,
I think Minneapolis, Minnesota.
you're absolutely right. So we're going to run them through our stock screener, which features three metrics: price to earnings ratio, payout ratio, history of increasing dividends, and of course, we'd be remiss if we didn't talk about our bonus metric, the dividend yield today, because that's the one other big thing going on with the banking. And then we'll just talk about a few other random tidbits about the banks as we go through it.
And we usually talk about the price to book ratio, but guys, there's no point to do that, in my opinion, because they're all trading very much well below book value right now.
Yeah, we did
Something
talk about
20
it.
plus percent.
We talked about it. It's out of the way. They all have low price to books ratio.
Yeah. But yeah, so again, the big key focuses here are how are they still earning? The answer across the board right now is yes. Um, are they huge? Yes. What happened though in the deposits? Was there an outflow or inflow across the three banks? We're going to cover each one into detail. But again, right now, the bottom yield on this list of Huntington, Key, and US Bank as a teaser is 6%. That's the lowest yielding stock on this list. The highest yielding stock is almost 8.5%.
That's insane. So let's go through the first one. Let's talk H-band Huntington, the smallest on the list at a balmy 189 billion. Price 1030. Geez. Earnings per share for earnings $1.43. PE ratio 7.2. Their annual dividend 62 cents. Payout ratio is 43 percent.
Wow, look at that, guys. So again, a very safe payout ratio right now for Huntington. Dividend growth rate for 5 years is about 11 plus percent. They had a little bit of a stalling period during the pandemic era, but they have increased their dividend. Their yield right now is about 6%. Stock price has been pummeled 27% this year. But guys, that's the lightest of the crew here. Down over the 52 weeks, about 24%. Market cap on this bank, again, Huntington's about 15 billion. So not small from a market cap, but not super large by any means. And actually, Bert, maybe you could touch on it. Again, what were their total assets and what happened to their total deposit base?
189 billion. Their Q1 deposit change was only down 1.8%, which is important because that's the big thing. There's a race for deposits right now in banks. Banks need cash.
Yeah.
That's it. That's what sunk First Republic. There was what they say, $100 billion of outflows in
Yeah.
1 week.
Yeah.
That's
60% of their deposit base outside of the 30 billion if you exclude that.
Yep. So it's a great sign that Huntington is only down 1.8%, which is also part of the reason why they're featured here. Should we talk about number two, Lanny, on this list?
Number two, guys. All right, let's go up to Cleveland from Columbus. Let's shoot up 71. We're at Key Corp. Ticker symbol is Key. Stock price is $9.71. That's a far cry from where they were. I remember when this stock was at one point over $20 a share. Analysts are still expecting $1.54. The first quarter earnings came in a little bit around 30 cents earnings per share. And I'm sure that might have a chance to improve as yields continue to grow for the remainder of the year on the investment and loan balance. Price earnings ratio is a 6.31. For what's that payout ratio looking like for Key Corp?
That 82-cent dividend, the payout ratio is 53%. And they have a 12-year streak of increasing their dividend at a 16.52% average 5-year dividend growth rate.
Oh, man.
We said Huntington was down 26% year to date. Key is down 44% year to date. So they have really they've taken a nice little macho man flying elbow off the top turnbuckle this last year.
Yeah, guys. Now, the funny piece about Key is that their dividend yield is now at 8.5% almost. And that's what happens when you're down about 50% in the last 52 weeks. But the interesting part about this 197 billion total asset bank is that they actually brought in deposits during the first quarter this year. Huntington was down almost 2% in deposits. Key was up 1%.
Insane. So let's move into number three here on this list. US Bank, ticker symbol USB. Their current price is $30.63. Forward EPS of 468, P ratio of 6.54. 6.5.
Whoa, guys, we're in it right now.
Yeah, these are some very low P ratios. Their annual their annual dividend is 192. That's a payout ratio of 41%. So another bank right smack in that perfect payout ratio range.
Yeah, kind of similar to Key. They've been increasing their dividend for over 12 years at an average rate of over 10%. Now, granted, I don't think many banks of this size will be doing anything to their dividend right now to send out more cash than what they already are. But the dividend yield now is swelled up. You had 6% with Huntington, you had 8.44% with Key. You're actually at 6.27% with US Bank. Wow.
Yeah, so let's look at their assets again are 682 billion. Their deposits are down 3.7%, so they've actually lost
Oh,
the most deposits from this list, which isn't a small amount. It's not a large alarm bell ringing amount, but it's worth noting. The other thing I did, I skipped over the performers. They're down 31% year to date, down 38% over the last 52 weeks.
wow. I mean, who would have thought that the biggest one on this list would have the most outflow?
Yeah, that's interesting. So who knows why? I mean, it's something worth looking more into for what could possibly be the reason why US Bank had those outflows. They also could have larger institutions, larger places that are trying to diversify their risk and spread their money out. So let's summarize here, everybody. We featured Huntington, Key, and US Bank, three massive top 20 banks. They're in that tier of large institutions. Landy, what are your thoughts right now on these banks?
Guys, I mean, not many of us, we have, but there are a lot of us. Maybe you're in your 20s, maybe you're a late teenager watching this. You weren't through the financial crisis. I mean, we were in it in our younger 20s, where banks were failing, banks were getting, a lot of FDIC assisted acquisitions. Obviously, we're now witnessing it yet again. So, now we have, you can call it four banks that have failed, with First Republic failing. Again, JP Morgan did buy them for about 10 billion with big FDIC law share agreements. So this is, we're in definitely a time that's going to be written in the history books. Again, some of the largest bank failures have now happened in 2023. So again, just kind of take a moment to understand the magnitude of what has happened, as well as what has happened just in the economy right now, with 500 plus basis points being increased over the last 12, 13 months. I mean, it's just kind of take a moment to let that sink in.
Yeah, it's crazy. And let's know that we're nibbling, we're still buying banks into the sector. And that's just our perspective on it. We're not saying go full boat into banks by any stretch, but we're saying take your time, do your research, watch more YouTube videos, read some more articles, and just let us know. Not let us know, but there is an opportunity to potentially get some value at a unique time in history, like you had just suggested, Lanny.
Yeah. Again, I'm not selling any bank stocks. Bert's not selling. Obviously, you guys got to do your own research. Let us know, like, kind of what you are thinking in the comments below as well. Again, we're all going through this right now. But it could be, you could look back on this, 3, 5, 10 years and say this was an amazing time to buy. Obviously, time will tell on that. But for now, collect dividend checks. Let them reinvest if you'd like to on these high yielding bank stocks. Bert, any other parting words related to the contagion that's happening right now?
Nope, but definitely if you're not with us, you're against us, everybody.
Oh man, again, guys, we appreciate it. Like the video. Don't forget to subscribe. That was Bert the Herd and Lanny from the Dividend Diplomats. Over and out.